Hey, boom, there we go. We should you should be able to hear me now. So this is what we're gonna do because I didn't want to waste too much of anyone's time because I appreciate how valuable everyone's time is. What I decided to do was just go ahead and basically delete Streamlabs and start over again from scratch. So this means two things. A, I'm gonna actually set this up on the fly while I'm chatting with you. So I think that you can hear me and everything should be going smoothly. Let's double check. If you guys can give me a thumbs up in the chat that you can hear me, all good, boom, yes, okay, awesome, cool. So here we go. This is what I'm going to do. I'm basically going to build a new screen here. I'm going to add a new scene in the background. So I apologize for this, but I figured the easiest thing to do is because it was late at night and this is going to be a little bit of a longer live stream anyways. We just go through this together. So this new screen now, so it should be a black screen. Okay, cool. So this screen, you're going to be able to see my display. Yeah, boom, boom. Okay, cool. And then we need to stretch to fit that to screen. Okay, and we're actually going to make, we got $2,000 here. We're going to lend to some underbanked entrepreneurs around the, somewhere around the world. If you haven't yet, be sure to check out Kiva. I'm going to go ahead here and in the background add another list, but there. Now you should be able to see Bitcoin on the screen, which is what we're going to get into next. But I just want to make sure that all this is going smoothly as I rebuild everything here. One more thing, video capture. There it is. Bang. That's the final one. Okay, and then you just go. Ta-da. Okay, cool. That's a little bit bigger than we wanted to go for there, but we'll go like this for now. Boom. Okay, so this will carry us through. We should be able to do the rest of the live stream on the fly like this. So thanks for bearing with us, ladies and gentlemen. Glad we got to figure that out a bit faster than I thought it was going to take. So that could have taken much longer. So thank you for that. Okay. Here's what we got. Bitcoin, this is actually on the daily. I'm standing by my 3 peaks and domed house thesis. That is a very strong reversal signal and that things are actually looking pretty good. Now, we had talked about this a few times over the last few videos. That was, okay, what's the likelihood of returning down to 0.10? And every time we were going out and doing our 3 peaks, domed house. Again, this is kind of work we can all do as individuals. This is the chart and the pattern that we were following. Again, there are many other places throughout history that you can find something similar to this. Move my face out to the side because a little bit on the left. Yeah, there we go. So this 3 peaks and a domed house sentiment always looks a little bit different in the wild. We had actually gone over a few different versions of it. Tesla was another good one that we really liked. So we're going to just make a quick comparison again before I kind of dive into the rest of why this thesis I think is so important. So first off, I've seen a lot of people that have turned very bearish as well. And these are actually really positive signals. When people start to finally turn bearish, like, oh, that's it, market's over, we're going to be in downtrends for years. These are signals we're actually looking for. So here is what I consider a very clear 3 peaks in a domed house. Again, remember that these footprints in the wild look a little different. They don't look exactly the same every time. So here it is. Again, by the nature of the sequence of events, the top here is not as high, but it's really 0.10 and 0.28. Now, again, when you're dealing with a footprint here, we're just looking for kind of specifics. Was this 0.10 or is this, and is this 0.28? Because 0.10 over here on the left-hand side, where my face again is currently in the way of 0.10 down here, and 0.28 on this side are the end of this pattern. So what that means for us is when we get to this point and we turn around, it usually turns up very quick and very sharp. The other analog that we had shared a bunch of times here was also the S&P 500. On a much bigger time frame, we'll go to a week here. Now these are scale and variance, so time frame is actually not super important. We're much more interested in the pattern itself. So again, there is reason to believe that point 10 doesn't have to and point 28 don't exactly have to line up. In fact, here at the 2008 collapse and the financial crisis, then we saw a 12% dip below what was effectively point 10 here. And you can see that a bit more clearly if we go to the candles. You can see that there was a wick that jetted all the way down to 66 points here, whereas point 10 largely stayed at around 78. So approximately 12% lower than our previous point 10. So this is a very strong analog in my opinion. I think, again, what this means here is when we go back to Bitcoin, try to make a larger thesis here. One of the other things we want to do, we'll go back to the daily actually, is take a look at the RSI. Now, one of the other features we thought was quite nice was actually that there was a bullish divergence within the RSI here. So this, when you see, and again, this isn't finished yet, so I'm not going to put it down quite that far. I actually think we're gonna go a little bit lower. 29,000 seems pretty good, which is exactly where point 10 was. If we open up the wicks here with Bitcoin, you can see point 10 hit exactly 29,500 something ish dollars. Well, exactly is probably the wrong word then. So somewhere within that pocket. I suspect that we come down here. And when people start being like, oh, bull market's over, if this is blah, whatever, come back in 6 years when things are booming again, that to me is very striking. Whereas in the Bitcoin bull market of 2017, it was started and was over so quickly. And my thesis is that we have been in accumulation market. So technically, when people call it a bull or a bear market, I'm agreeing with them to some degree. Bear markets, based off the emblem of the bear, should be an accumulation market. And I believe that this market is largely still in accumulation. And there are other ways that we are looking at that. So I think this 3 peaks in a domed house thesis is going to pay off. I think it's going to turn around very quickly once it does. Again, Bitcoin is very dramatic. These are very illiquid supplies, and people are very dramatic. Bitcoin has no emotional sentiment whatsoever. People are very dramatic, and through this, they make the common mistakes of being over irrational. So you could see even a quick dip of like 20,000, something crazy, right? Now, I don't think that this would last very long, and I don't think that would actually happen or is that big. 29,000 feels pretty good just because of where point 10 was. Again, when we compare it to S&P 500, it's clear that it can slip below that. It's not exact. There are many other examples that are out there that you can find, but from what we found, these are kind of the best analogs for the kind of shape, at least that we're in, and then what comes afterwards, which is usually an extended multi-year bull market. Now, there's a lot of crap going on in the world out there, but let's first off take a look at Solana and a few others here. So Solana's clearly closed below the box, and there's a huge chunk of support down near $30 or $40 from the, let's call it the DeFi summer range down here. So I suspect that we'll actually revisit that. What's interesting right now, though, is we're already seeing a little bit of divergence there, but Solana's got a way to go to refill this accumulation channel. I think you'll probably refill this box of between 40 and 70. Avalanche is actually looking really strong potentially, although we'd gone over this prior. Actually, I'm going to use a straight line. It'll make it a little bit easier. Okay, so we're falling just above a trend line here. Now, we thought that this was a reaccumulation channel as well, and we've seen it quite commonly where it breaks below the box before moving up quite dramatically as well. So I'm not convinced that this is any more bearish than we've been, technically. I think that this is equally as bearish. So I'm sitting on the same cornerstone that right now, that extra little bit of people capitulating, being like, that's it, it's over and done with, I ain't coming back. So what we're going to do here next, I guess, is look at, how can I do that? And just, maybe I should just get rid of this face on the screen. Yeah, that's what I'm going to do. Let's get rid of that for now. Boom, just the screen. Okay, that makes more sense for now. Okay. So here is the supply on exchanges. Now, there was a chunk of supply that came in A few 100 million of Bitcoin came in quite quickly. Saw it on Whale Watcher there. I saw a Lark post about it. And here we can see it come into the market, and it was pretty dramatic for price. And again, this is one of the things that I constantly, at least this part, we know we get right, because anytime there's an illiquid supply, it goes both ways. Volatility isn't always to the upside. It's when that increased demand starts. And again, what's really interesting about big players, especially ones that have lots of money to be here, their game is not to try to run the price up. They know how to not do that. And what was interesting, again, about 2017 versus where I believe we are now, is the level of interest that each player has to be able to make this market be a bit more calm in terms of the way it reacts. So right now, I think we're seeing very large accumulation, and we can see this noted here by this constant decline in supply. Even if the price is reacting to the downside right now, to the new supply onto the market, it's because the big players are chewing up small amounts day over day to pick up that 36,000 Bitcoin. Like the Luna Foundation is not going out and trying to buy, like market buy 39,000 Bitcoin all at once. It's going on, it's accumulating very small amounts of it so it doesn't affect the market price. That's one of the main goals. Don't jack the price up while you're trying to buy it. In fact, get as much of it for as cheap as you can. So as the supply is decreasing, any nominal new amount of supply in the market can actually dramatically reduce the price, but this is usually very short-lived. Now, we could go back and take a look here at Bitcoin just for some fun. Back in, there's actually a few good areas we can look at because of how quickly things change. We'll go back to 2017 when we dropped from a 6 down to 3,000 and measure this time out. Okay. So right now on the screen, we're actually back in the 2017 Bitcoin bull market. And what I want to do here is make a comparison of time. More than price and volatility, just a function of time, I think is important to understand. So here is the peak of Bitcoin's price in 2017, and the following down all the way to $3,000 in 2018. So from peak to bottom, you're talking about 366 days. Okay, so let's say this was the peak. Here, let's go right there. How many days have we been peaking out so far? Oh, look at that. About 380 days. That's interesting. Again, we're not focused on price here, just time. Okay, time is a very interesting function. I would assume any human on this planet, if you got into a really good conversation with them about time, go pretty deep. So because time is so expansive and so important in how we function on day-to-day living, as most people operate in a fairly linear world, we went from $20,000 down to $3,000 in 366 days. That was the localized bottom. Okay, well, that's exactly what we just did. All I'm doing here is making a hypothesis. We see some pretty functional, repeatable events, and regardless of how, again, the scale that they're on, because the scale can change. Like as we zoom in and zoom out of any chart, the scale is clearly going to change. What do we see within that scale function? So between the peak and the next breakout, it was only 1,000 days. So think about that. You know, the majority of the bull market in Bitcoin went from $3,000 basically here to $20,000 in less than 95 days. Okay, and this is effectively what we saw here too. A very, very quick up ramp price. Okay, boom, 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 from there to top, 220 days. I mean, we could measure the breakout, I guess, from the $17,000 mark, and you're about 140 days. So I think that this is effectively the localized bottom, or whatever you want to call it. I think that the three peaks in a domed house, regardless of if we have a 10% slip below 29 grand, I think will be totally irrelevant. Let's say, again, where are we at? That would be, let's be generous and give it 25%. Yeah, 22,000 or 19. Again, I don't think you'd see a slip that low, but a liquid supply with irrational people, sure, why not? But even if we see this, I think it's the level of player here we have now is going to be so short-lived because we're already through what is effectively the first third of it, of an accumulation market. And again, I think that this is all, should be all accumulation. Like basically all of 2017, anytime you were buying below $17,000, you're still stoked, right? That entire process of buying for years, you're up. So being patient is important. But again, I think having a good thesis, or a hypothesis, I guess that's what you call it, yeah. Just a little bit above a thesis. Oh yeah, so I think we're gonna see 29 grand, probably pretty quick. I think we're gonna turn around pretty quick. That's my hypothesis. I'm sticking to it. Oh yeah, I also wanted to look at the traditional markets. Look fucked though, I tell you that much. I would way rather be in Bitcoin for a downtrend than the S&P 500 or any of the other traditional markets. So the Fed is going to have a really, really interesting time on its hands trying to navigate unwinding a balance sheet that is bigger than anyone's ability to buy assets in the entire goddamn space. So it's just silly. I think they're just silly. I don't even know if they know they're that silly, because it's criminal if they do know, because it's surely going to wreck things. But anyways, yeah, there's a long ways down here that they could push the equity markets. Technically, there's a much further way down to go for equity than Bitcoin. I think Bitcoin would actually hold out very much better throughout the storm, and we actually see evidence of this already. Let's take a look at some of the most beloved stocks here. The Netflix looks like a giant shit coin. And what's astounding here is that, let's say you bought Netflix between 2018 and 2023. it's basically 3 to 5 years. The entirety, you would be down no matter where you bought. So this is not boding well for anybody who invested in Netflix in the last basically 5 years. That's crazy shit. That's horrible, effectively. For anyone that was just, again, focused on Netflix. And we actually have used Netflix as a pretty good example if you had started investing from its first days. But again, we're seeing this kind of breakdown across the board, and huge equity sectors like this. This where all the traditional people are at. And here you got 40% on Amazon. We're not going to use Twitter. We're not going to use Tesla either. Let's take a look at Google. Google actually fared, I think, fairly well so far. But even Google right now, yeah, Google's down approximately 24%. And there's one more. Oh yeah, we could just make fun of Moderna here, because it's, who doesn't want to make fun of Moderna? This garbage crap here, down 75%. I mean, Bitcoin still today, even from its previous high here, is only sitting at 48%. So that means Netflix is 25% lower than this right now. This is approximately the same low as Amazon is going through right now. So I didn't check Apple either, but I would probably assume Apple. Well, I shouldn't assume, right? Let's just take a look. Apple Inc. on NASDAQ here. How has Apple fared? Actually, hey, Apple's, well, this is a pretty short time frame. I don't suspect that that's going to last. Yeah, look at that. Incredible. That's incredible. Apple's down 15%, but look at the weekly chart here. Okay, well, that's Amazon's weekly chart. That's amazing. That's just for fun. I actually haven't looked at Apple, apparently not on a big time frame. Nice. This is fantastic. 17,000%, excuse me, from August 2004 to March 2022. Okay, and just while we're here, let's drop the M2 money supply on here to see how it fares. Oh, you know that monetary supply, it doesn't look the same at all. Like Apple clearly grew outside of just simple monetary inflation, whereas the S&P 500 looks like it was almost entirely just inflation, basically creating the asset growth. Wow, that's an incredible chart. I don't think that this is ultimately sustainable. This may be a better question, like about how we function as a society. Like, guys, some of the things we're doing are just probably not sustainable. But that's a damn nice chart. You got to give them that. Yep. Okay, I want to keep it simple and short. We've got a wonderful dinner cooking here in the background, so I'm gonna get on that. Again, ultimately, I feel for some reason kind of cockishly confident just about this trading range. I think that the players here have changed the game. Now, I guess to some degree, it's important to recognize how much higher we are than where we were, right? Like, this is where we were so excited. Like, I remember when Bitcoin went back down here, like this ruined. We were like, oh no, it's no fun, right? And this happened in a very short period of time. It was only 360 days. This is the exact same amount of time it took to get from where we were at the previous high to where we are right now. So, the other important thing I think to remember is that this entire time, had you bought the top and then you just bought every month effectively, what you end up getting is a really, really nice rounded price, usually around the point of control. If you just consistently buy like on the whatever of every month, you end up usually right at the point of control. And it's like a really sound investment thesis to kind of navigate the waters by finding conviction through time like this. Bang, 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 bang. Just keep buying. And then effectively it pays off. Now, again, there are clearly examples where this is not a great idea. You want to be early. You want to be as early as possible to any investment. Like, if you come late, like with Netflix here, like it's clearly a lot of room for downside. And with Bitcoin, if you're new to the game right now, you got to understand that's also important. Like, look, let's just for fun say we come down to $11,000. Are you okay with that? Effectively, as long as you're okay with that sentiment, then you're going up. With the conversation we had earlier, is like you got to buy at least a few tops and you got to at least panic sell a few bottoms before you start to understand the nature of this game. And it's really only through experience, and because of some of those experiences are usually quite visceral in how they go about taking place. It's more about experience than anything, and the lesson that most people need to learn is really about experience through those times, because that's when it starts to make more sense. You're like, oh well, Tio, look, if it's just buying is so easy when you know what's going to happen. It's like, well, no, actually, in 2017, it was still not clear to me that we were going to be as successful as we are, which is fantastic. Seeing the market grow and mature this much over the last few years is great. I think it's in a much much better position to grow globally and find real grassroots adoption. Things like Axie's really impress me. So I think we're on a good pathway for this technology to continue to proliferate regardless of what's happening. And although there's probably going to be some big shocks and bumps within the traditional financial system because, they've built a garbage can of fired crap burning plastic, given horribly backed loans to companies that are basically undeserving of any capital. And the government is prone for this in general. They're not very good at delegating where money should go. Otherwise, they would end up have been a profitable business. And instead, what they do is they've just figured out how to basically congressionally print money, give it to where they think it's needed, sell that to get more votes, and then continue to do that, basically stealing all of your purchasing power from you in plain sight by obfuscating the ideas of, hey, it's just a little bit of inflation every year. Anyway, so keep that in mind. This story has happened a bunch. I always recommend a book called The Dying of Money. The Sovereign Individual is great too. I'm reading that right now. But The Dying of Money is really interesting because it goes over like 15 to 20 times inflation happens, and governments seem to all do the same thing. This is one of the ideas behind investing. Is human nature hasn't changed. It's not going to change. It looks like it's going to stay that way for a while. So anyways, thanks for sticking around with me this evening. I'm going to go over a few more things. We're probably, now the live stream's working again, which is really nice. I was a little bit worried too, because it's not easy to set this stuff up sometimes. It takes a bit of effort. So I'm glad we were able to get back online this evening, even though I was having what I thought was some pretty important technical difficulties. It's not connecting. That sucks. That's not a Anyways, thank you, Bear family. We will see you guys on the next episode. Oh, wait, hold on. I see a few questions. Okay. No, we're just gonna go for dinner. We're gonna go eat dinner right now. I look forward to speaking with you